Hello, everyone, and welcome back to our channel. We are introducing a new segment dubbed Insurance Terms. In this segment, we seek to define and explain common insurance terms that are used by insurance professionals on a daily basis. In our first video, we have an interesting topic to discuss that you may have come across in the world of insurance. First, loss sum insured. Have you heard this term and ever wondered what it means and how it's applied? Well, you're in the right place. In this video, we'll delve into the meaning and application of first loss sum insured, exploring how it benefits both policyholders and insurance companies. So, let's jump right in. Background. Insurance is all about protecting our valuable assets and properties from unexpected events, but sometimes ensuring the full value of our belongings or investments can be costly. There are situations where it is not possible to suffer total loss of the insured value, i.e., it is not possible for burglars to steal all the stocks in a retail chain store or fire to burn all the buildings or properties, especially if they are in different locations. If, upon careful examinations and on advice from risk advisors, it is determined that it is not possible to suffer 100% loss of the insured items at any one incident, the insuring party may consider insuring just a percentage of the total asset value, depicting maximum foreseeable loss or first loss sum insured. Definition of first loss sum insured. The term, first loss sum insured, refers to a type of insurance coverage where the policyholder insures only a specific portion or percentage of their total assets or property value. In the event of a loss or damage, the insurance company will only pay out up to the predetermined first loss sum insured amount, regardless of the actual value of the assets or property. For example, let's say a business has total assets worth $1 million and they choose a first loss sum insured policy with a coverage limit of $300,000. If the business suffers a loss of $250,000 due to a covered event, the insurance company will reimburse them for the entire $250,000 loss. However, if the loss exceeds the first loss sum insured limit, say $450,000, the insurance company will still only pay out $300,000, as per the policy terms. First loss sum insured policies are commonly used when insuring high-value assets or property where the full replacement cost is not deemed necessary or economically viable, or in stock insurance where it is not possible to lose all the stocks in a single incident. By insuring only a portion of the total value, policyholders can often obtain insurance coverage at a lower premium cost. However, it's important to note that first loss sum insured policies may not provide full compensation for losses exceeding the predetermined limit. It's a unique approach to insurance coverage that allows policyholders to insure only a specific portion or percentage of their assets or property value. By doing so, they can still enjoy coverage for significant losses while keeping their premiums manageable. Various policies where the first loss sum insured can be applied. First loss sum insured can be applied in various insurance policies across different sectors. Instead of insuring the entire value, which can be quite expensive, you can opt for a first loss sum insured policy and cover a predetermined amount, such as a percentage of the total value. The first loss sum insured can be applied in various insurance policies across different sectors. Here are a few examples. 1. Property, burglary and fire insurance policies. In property insurance, especially covering various buildings, stocks, or contents, a first loss sum insured policy can be utilized to cover a specific percentage or portion of the total property value. 2. Contents insurance. Similar to property insurance, contents insurance can employ a first loss sum insured policy to cover a specific portion of the total value of belongings within a property. It allows policyholders to insure a predetermined amount, such as a percentage of the total value, instead of insuring all contents individually. 3. Fine art insurance. When insuring valuable art collections, a first loss sum insured policy can be employed to cover a percentage of the total value. This is often used when insuring large art collections where insuring every individual piece would be impractical. 4. Jeweler's block insurance. In the jewelry industry, jeweler's block insurance provides coverage for loss, damage, or theft of jewelry and related items. A first loss sum insured policy can be used to insure a portion of the total value of the jewelry inventory, ensuring protection while keeping premiums manageable. 5. Cyber insurance. The first loss sum insured can also be applied in cyber insurance policies. With the increasing risk of cyber attacks, businesses may choose to insure only a specific amount of their potential losses, such as a predetermined percentage of their total assets or revenue, to mitigate the financial impact of a cyber incident. It's worth noting that the availability and application of first loss sum insured policies may vary across insurance providers and jurisdictions. It's important to consult with insurance professionals or brokers to understand the specific options available for each type of insurance policy. Advantages of first loss sum insured to both policyholders and insurance companies. First loss sum insured offers advantages to both policyholders and insurance companies. Let's explore the benefits for each. A. Advantages for policyholders. 1. Cost-effective coverage. First loss sum insured policies allow policyholders to insure a specific portion or percentage of their assets or property value. This approach can be more cost-effective than insuring the entire value, particularly for high-value assets. Policyholders can save on insurance premiums while still obtaining coverage for significant losses. 2. Tailored coverage. Policyholders can customize their insurance coverage based on their specific needs. By choosing a first loss sum insured policy, they can select the coverage amount that aligns with their risk tolerance and the value they wish to protect. This flexibility allows policyholders to strike a balance between cost and coverage. 3. Simplified claims process. In the event of a loss, a first loss sum insured policy can streamline the claims process. Since the policyholder and insurance company have predetermined the coverage limit, the claims settlement can be faster and more straightforward. There is no need for lengthy valuation processes to determine the actual value of the assets or property. B. Advantages for insurance companies. 1. Lower risk exposure. With first loss sum insured policies, insurance companies have a predetermined maximum liability. By insuring only a portion of the total value, the risk exposure is reduced compared to insuring the full value. This can help insurance companies manage their risk portfolio and maintain financial stability. 2. Premium calculation. First loss sum insured policies provide insurance companies with a clearer understanding of the coverage required by the policyholder. It allows them to assess the risk more accurately and determine appropriate premiums based on the selected coverage amount. This helps insurance companies set premiums that align with the potential risk exposure. 3. Enhanced profitability. By offering first loss sum insured policies, insurance companies can attract a broader range of customers. Policyholders who have high-value assets but may find it cost-prohibitive to insure the entire value can opt for this coverage option. This expands the customer base and potentially increases the company's profitability. 4. Reduced claim costs. Since first loss sum insured policies have predetermined coverage limits, insurance companies can cap their potential claims liability. This helps in managing claim costs, as the company's obligation is limited to the specified amount. It provides more predictability and stability in the claims settlement process. Overall, First Loss Sums Insured benefits both policyholders and insurance companies by providing cost-effective coverage, customization options, simplified claims processes, reduced risk exposure, accurate premium calculation, enhanced profitability, and controlled claim costs. So, whether you're a policyholder looking for cost-effective coverage or an insurance company aiming to manage risk exposure, First Loss Sum Insured can be a valuable tool in the insurance landscape. It provides flexibility, customization, and peace of mind for both parties involved. We hope this video has shed some light on the meaning and application of the First Loss Sum Insured. If you found this information helpful, don't forget to like this video and subscribe to our channel for more insightful content. Until next time, stay protected.